Hi again everyone, my name is Narina and today I will further explain the procedure for recording the vote book. So this is the format of vote book, which I have shared according to the three parts of vote book. The yellow shaded table is the part 1, the green shaded part is part 2, and lastly the pink shaded is the part 3 of the vote book. And this is the meaning of the vote book, which can be found in page 198 of the textbook. Note that debit columns is to record any amounts that reduces the budget under vote expenses, and credit column is to record any amount that increases the budget under the vote expenses. So these are the 12 types of transactions that I have mentioned during my presentation last week. So now I will explain them one by one. The first transaction, which is allocation warrant receipt. So when a warrant is received for the first time in a particular year, part 1 and part 2 of the vote book is to be filled up for the date, amount, and amount to date column. The details of allocation will then be recorded in part 3 as increased allocation in the credit column. So the other column that will be affected is column number 1, 2, 5, 7, and 11. Next one is additional allocation warrant received. So when the additional allocation warrant is received, again part 1, 2, and 3 will be affected as well. The next transaction is reduced allocation. When allocation is reduced, it will be recorded as reduced allocation in part 2, and in part 3, it will affect column 1, 2, 5, 6, 9, 10, and 11. Transaction 4 is sub-allocation warrant. When an allocation is provided to the allocation holder in another branch, it will be considered as debit transaction. In part 2, the debt amount as a negative value and the total to debt is reduced, and in part 3, it will affect column number 1, 2, 5, 6, 9, 10, and 11. Transaction number 5, transfer allocation. So transfer allocation or payment can be done between the objects of expenditure within the same program or activity under the same vote. There are two types of transfer allocations, which are payment in and payment out. So payment is a transfer of allocation between subheads within the same ministry. When a payment is received, part 2 and part 3 will be affected. So in part 2, we will record the debt, the amount as a positive value, and the total to debt is increased. In part 3, it will affect column number 1, 2, 5, 7, 9, 10, and 11. Next is payment out. When a payment out is met, the same column will be affected. The only difference is in part 2, payment out will be recorded as a negative value, and in part 3, it is recorded under debit column. Transaction number 6 is incurred liability. When a commitment for expenditure of goods or services is done through traveling warrant, local order, work indent, or upon signing any contract or agreement, a liability is incurred or charged. This transaction must be recorded at the time of issuance of warrant, indent, or signing a contract. So there are three types of liability. First is direct liability. Second is a liability with period that less than 12 months, and lastly is a liability with period equals to 12 months. Direct liability will affect column 1, 2, 4, 5, 8, 9, 10, and 11 in part 3. And the other two types of liabilities will affect the same column as direct liabilities, and the only difference is the amount to be recorded. For a liability with period less than 12 months, if the contract or agreement is signed for the period of 1 year starting in between of current year, the amount of liability is proportionate up to December of that particular year. For example, when a contract amounted to 60,000 is signed for 1 year starting from May, the amount to be recorded is 60,000 times by 8/12, which is 40,000. 40,000 is the amount to be recorded. And why is 8/12? Because May to December is 8 months and the contract was signed for a year, which is 12 months. The other one is for a liability with period equals to 12 months. If a contract is signed for more than a year, the effective period starts in January of the current year. The amount of the contract should be apportioned to that year. For example, a contract of 60,000 is signed for a period of 2 years starting January. So the amount to be recorded is 60,000 times by 12 over 24, which is 30,000. Why 12 over 24? Because January to December equals to 12 months and 2 years equals to 24 months. For cancellation of liability, if any of the procurement commitment or supplier contract is cancelled, the earlier transactions recorded as liabilities charged and outstanding liabilities have to be adjusted. This transaction is also known as contra transaction and involves columns 1, 2, 4, 5, 8, 9, 10, and 11. Moving on to the next transaction, which is record expenditure. So any payment voucher that has been prepared will be considered as expenditure, including payment of liability. So amount to be recorded depends on the amount paid. So there are 4 types, which is direct expenditure. Amount of liability is equal to the amount paid. Amount of liability is less than amount paid, and amount of liability is greater than amount paid. For direct expenditure, it is when a payment voucher is prepared for the expenditure, money paid out should be shown in the debit column. So in part 3, it will affect column 1, 2, 4, 5, 6, 9, 10, and 11. For amount of liability that equals to the amount paid, the column that will be affected is the same as direct expenditures, except for this transaction, column number 8 will also be recorded, and the amount will be recorded in brackets since the liabilities are paid. For amount of liability that is less than the amount paid, if the earlier amount of liability is lesser than the amount that government has to pay, another order has to be prepared to show the differences. First, we will record it as an incurred liability, so the column that will be affected are column number 1, 2, 4, 5, 8, 9, 10, and 11. Second step is we will record as the payment transaction, and here the amount paid will be recorded under column 6, and in column 8, the amount will be recorded in bracket. The last type of expenditure is amount of liability that is more than the amount paid. For example, when there is a discount. So when the amount of liability is more than the amount paid, the column that will be affected is column number 1, 2, 4, 5, 6, 8, 9, 10, and 11. In column 8, the full amount of liability will be recorded in brackets. And in column 11, the difference of the amount will be added to the balance to debt. For example, when the amount of liability is 20,000 and the discount given is 2,000. So this 2,000 will be added back to the balance to debt column. Transaction number 9 is credit expenditure. When a refund or payment has been received, it is considered as a credit expenditure. However, there are 2 different situations to be recorded in the vote book. The first situation is when there is no requirement for payment. So if there is no requirement to repay credit expenditure in the future, the vote book involves column number 1, 2, 4, 5, 7, 9, 10, and 11. For example, transactions like personal telephone charges, which is not payable by the government. The second situation is requirement for repayment. So if credit expenditure requires repayment, the vote book will be shown as credit amount. So the recording that will take place is column number 1, 2, 4, 5, 7, 8, 9, 10, and 11. For example, when there is a cancelled check. The next transaction is adjusting entry. If any error incurred during the recording of contra transaction, it cannot be erased in any way. Correction using correction fluid or erasers are not allowed. Instead, it must be done with a straight line across the error and replaced with the correct transaction. Adjusting entry needs to be done considering that the error has been identified. If the transaction is left out, it should be recorded as ordinary transaction. But if it is a total mistake, it needs to be adjusted by reversing the record to get back to the original amount and record the correct transactions as it should be. And the column that will be affected is column number 1, 2, 4, 5, 8, 9, 10, and 11. The second last transaction is closing entry. All closing of transactions will be done on 31st January in the subsequent financial year, in line with the modified cash basis. Any balances from the liability will be brought forward and recorded in the new void book in the following year. So the column that will be affected is column number 1, 2, 3, 5, 8, 9, 10, and 11. And finally, the last transaction, liability brought forward. So for outstanding liabilities brought forward, it will affect column number 1, 2, 3, 8, 9, 10, and 11 of part 3. Alright, now for a better understanding, I'll show you how to do the recording using past year question. And here I am going to discuss using past year question January 2018, question 5B. So get your past year question ready. Let's do this together. So the question wants us to record void book for the month of January 2017 under object 27000, void B27, and program or activity code 0300. So these types of information would usually be given in the final exam, and they will be recorded in the first column of part 1. Next, the first transaction was on 3rd of January 2017, where an allocation warrant with reference number WP1/17 is received, amounted to 640,000 ringgit for the object 27000 from the Director General. So this is the first allocation warrant received. Therefore, it will affect part 1, part 2, and part 3 as well. So in part 1, we will record the allocation as at the estimated year of 2017 with the amount of 640,000. In part 2, we will record the date of the transactions, the amount, and the amount to date. Lastly, in part 3, we will record in column 1, 2, 5 with the reference number given, and then we will record the amount under credit column as now the budget has increased. And finally, we will record in column 11. So column 1, 2, 5, and 11 cannot be left blank. So for the sake of this video, let's just call it the basic columns. And for the other columns, it all depends on the information given. And object 2700 is the object code under service and supplies, which we will learn in chapter 7. Second transaction is an allocation warrant of 46,000 ringgit is issued to Pejabat Kesihatan Bangi, which means that this is a reduced allocation. So if you remember what I have explained earlier, reduced allocation will affect in part 2 and part 3 only. So in part 2, we will record the amount as a negative value, and in part 3, we will record the amount under credit column. So now column 11, the balance to debt is reduced to 594,000. It's because allocation of 640,000 has been reduced by 46,000. In the third transaction, an agreement was signed with Syarikat Alatan Pejabat Yusof Sendirian Berhad for a period of 1 year, starting January, amounted to 24,000 ringgit, and the expenditure code given is 27222. So this is a liability with period equals to 12 months. Now the amount to be apportioned is still to 24,000, as from January to December is 12 months. So if we multiply 24,000 with 12 over 12, we will still get 24,000, and this type of transaction will only affect part 3 of the void book. So it will affect the basic columns, and then column number 4, as there is an expenditure code given, and the amount of 24,000 will be recorded under column 8. Now that we have liability charge, so column 9 will also be recorded, and the balance to that is reduced by 24,000, as a liability incurred will decrease the budget. Next transaction is a local order 13435 is issued to Shazali Perabot for supplies of equipment, amounted to 44,400 ringgit with expenditure code 27322. So this is a liability incurred, but since there is no period mentioned, therefore this is the direct liability. So the amount to be recorded is 44,400, and we will repeat the same steps as the previous transaction. But now, column 9, the outstanding liability has now increased to 68,400. So how did I get this figure? It is the 24,000 from the previous liability transactions plus 44,400. And again, now the balance to debt has further reduced by 44,400. Here there is a transfer allocation from object 30000 amounted to 16,000. So I have mentioned earlier that there are two types of transfer allocation. So which one is this? Okay, since it is a transfer allocation from, the word from indicates that this is a Weimann in. So it will affect part 2 and part 3 of the vote book. In part 2, the amount will be recorded as a positive value and the amount to that is increased by 16,000. Whereas in part 3, the amount will be recorded under credit column as it has increased the budget. Since this is not a liability, so we are just going to copy down the previous figures in outstanding liability down and finally increase the balance to that amount by 16,000. On 13th of January, a payment voucher is prepared to Shazali Prabot amounted to 24,400. In transactions 4, the amount of liability is 46,000, but the payment voucher prepared is only for 24,400. This means that this is an expenditure whereby the amount paid is less than the amount of liability. Therefore, it will only affect in part 3. So we will record the basic columns, and since the payment will decrease the budget, so we are going to record the amount under the debit column, and column 8 the amount will be recorded in bracket to indicate that it has been paid. And then the outstanding liability is now will be reduced and the expenditure column will also be affected. And if you notice that the balance to that is not affected, because do you still remember the two steps that I have explained in slide 16? It's because in the first step we have recorded the full amount of liability amounted to 46,000, which means that we have already reduced the budget for the liability. So if we reduce the balance to that again, there will be double reduction of the budget for the same transactions. That's why we will not reduce the balance to that when the liability is paid. The next transaction on 15th of January, an additional allocation amounted to 30,000 is received from the Director General. So obviously this is an additional allocation, therefore we will record in part 1, and now the total allocation for the year is 670,000. Next, in part 2, the amount will be recorded as a positive value, at the same time increase the amount to debt, and in part 3 it will affect the basic columns. The amount will also be recorded under credit column. Next, we will copy the outstanding liability and expenditure down, and finally the balance to debt will be increased. Okay, moving on to the next transaction. An indent is issued to MS Computer for the supplies of computer amounted to 6,800 ringgit with the expenditure code 27422. So indent is like a purchase order by the government for good plates from a foreign supplier, and therefore this is a liability. What type of liability? Right, this is a direct liability, and liability will affect part 3, and the column that will be affected is the basic columns, and then record the amount under liabilities charge, increase the outstanding liability by 6,800, and then copy down the expenditure amount, and finally the balance to that is decreased to 564,800 ringgit. Okay, on 18th of January 2017, a contract P/T19-1919 amounted to 90,000 is signed with Syarikat Mizi for supplies of hygienic products for 1 year starting from August 2017. Expenditure code given is 27522. So this is a liability with period equal to 12 months. So this liability will be a portion. August to December is 5 months. So we will multiply 90,000 with 5/12. We will get 37,500. So this is the amount to be recorded. And now to record, we will record the amount under liabilities charge column, increase the outstanding liabilities, net expenditure will be the same, and finally the total to that now become 527,300 300 ringgit as we reduce 564,800 ringgit by 37,500 ringgit. Next, there is a transfer allocation to object 23000 amounted to 5,000. Notice the word to. This means that this is a Weimann out. So for Weimann out, we will record the amount as a negative value in part 2, which means that the allocation is transferred out. So that's why we reduce the total to that to 635,000. Next, in part 3, we will record the amount under debit column as it reduced the budget, and then copy down the outstanding liabilities and net expenditure, and finally reduce the balance to that as well. This one is very straightforward. So for reduced allocation, we will definitely record 24,000 as a negative value in part 2, and that will give us the total to that equals to 611,000. In part 3, we will record 24,000 under debit column, and the balance to that now became 498,300 ringgit. So as we record the non-liability transaction, we must not forget to copy down the outstanding liabilities and net expenditure amount. So next one, on 24th of January, an invoice amounted to 23,500 is received from Syarikat Alatan Pejabat Yusof, and a payment voucher is prepared for full settlement. So if you look back to the third transaction, the full amount is 24,000, but the full settlement was made for only 23,500. So this means that the company gave a 500 discount. Therefore, this is an expenditure where amount liability is greater than the amount paid. So for this type of expenditure, we will record the amount of 23,500 under debit column and record the full amount of liability, which is 24,000 in bracket under column 8. Why? Because the liability incurred on January 7 of 24,000 ringgit is fully settled, so we will eliminate this liability from the outstanding liabilities. And now the expenditure will increase by 23,500 as this is an expenditure incurred. And finally, the balance of 500 ringgit, which is the amount discounted, will now be added back to the balance to debt. So the balance to debt now equal to 498,800. So this is how I understand it. For example, on January 7th, you have 594,000 in your bank account for your wedding budget, and your wedding dinner cost for 24,000. So you will reduce 24,000 from your budget. And later on 24th of January, it is time for you to pay for the wedding dinner, but they gave you a discount of 500. So now you only have to pay for 23,500. You get to keep the balance of 500. So now of course, you will add back the 500 to your wedding budget, right? And same concept applies here. That's why we added back the 500 to the balance to debt. Alright? So now, in the second last transaction, there is a cancellation of check issued to Shazali Purabot on 13th of January due to error on check. This means that we need to adjust the entry that we did on 13th of January. So we need to reverse back the record by recording the amount issued on 13th January, which is 24,400 under credit column. Record it back as a liabilities charge, increase the outstanding liabilities, decrease the net expenditure, and the balance to that amount is still 498,800 ringgit, because as we credited the amount, it increases the balance to that to 523,200 ringgit, but then we increases back the liability charge. So now the balance to that became 498,800 again. And finally, the last transaction is a collection of personal phone charges amounted to 540. This is a credit expenditure with no requirement for repayments. So we will record the amount under credit column and subtract the amount from the net expenditure, and finally add back to the balance to that, because personal phone charges is not an operating expenditure to the government. So here is the full solutions on this past year question for you guys to refer and for your self-study. Okay, and lastly, I want to apologize if I didn't explain it very well, but you can always ask me if you don't understand, and I will try to answer. And thank you so much for your time. I wish you guys all the best, and bye.